Hey everyone, Carvana reported fiscal year 2023 second quarter earnings results that sent the stock price soaring by almost 30%. So in this video, I'm going to review Carvana's latest earnings results as well as update my recommendation on Carvana stock. Now, full disclosure, coming into these earnings results, I did not have Carvana stock rated as a buy. So if you listen to me and you did not buy the stock, you would have missed out on this nearly 30% jump in the stock price. So I got this one wrong. Going into it now, let's see if I'm going to update my recommendation after these financial results. So I can't say this enough, but this is one of the better quarters I've observed from any company in a long time. Carvana really improved the business significantly in just one quarter, and that's a really difficult thing to do. Now, some of it, I would say a great deal of it was due to the market moving in its favor, but it also reflects good decisions by management. So kudos where kudos is due. But let's get right into it. Total revenue of 2.97 billion was down by 35% from the same quarter last year, but that's okay, and I'll discuss why a little bit more. The net loss on the bottom line improved to 105 million. That was up from a loss of 438 million in the same quarter last year. Here's where the impressive performance begins. The gross profit per unit increased by $3,152 to $6,520. This essentially means, on average, Carvana made $6,520 on each car sale. That's remarkable for a used car sale company, right? They're not selling brand new cars with market prices of 100,000, right? They're selling lower priced cars, and to generate $6,520 is remarkable. Although I will say I don't believe that's sustainable. I don't think they can make $6,520 per vehicle in the long run, but it was great because they needed this right now. As you could see, the company's losing a lot of money on the bottom line, and so a good quarter was crucially important for Carvana. The number of units sold decreased by 35% to 76,530. But I'm okay with that if you're going to make more than double the profit on each vehicle, because your gross profit still goes up if you make more than double each vehicle, but your total retail units sold decreased by 35%. So I'm okay with that. But here's another great thing for Carvana. It was able to sell $1.93 billion of loan principal it had on the balance sheet. So when you buy a car from Carvana, Carvana offers you financing. But if Carvana cannot sell that loan that it originates, then its hands start to get tied because its capital is tied up in loans that it only is going to get back on a monthly basis as consumers pay back the loan. But if it can sell all those originated loans to a third party, then it can use that money to then go out and buy more cars, finance more customers, and then sell it, and it really circulates the business a lot faster. But Carvana was not able to do this in the previous two quarters because the market, the third party market for these loans, had dried up. It wasn't strong. So if it wanted to sell those loans, it was going to have to take a much lower price. So the market improved as lenders became less cautious about the potential fears of a recession and mass job losses. That hasn't really happened so far, right? So remember earlier in 2023, there was a big fear of a big recession with a lot of job loss, and that hasn't really came to fruition, right? Economic growth has slowed to some degree, but there hasn't been mass layoffs, right? We've seen some layoffs from tech companies and some other companies, but it hasn't been widespread. The unemployment rate is still extremely low. So lenders are becoming a little bit less cautious now, and that market working in Carvana's favor that I talked about earlier in the video. this was crucial for Carvana to sell nearly $2 billion of loan principal. The downside is that holding on to those loans on the balance sheet increases Carvana's gross profit because that's a more profitable business, right? When you're making loans and servicing those loans, that's a better gross profit than buying and selling cars. And so there's a give and take there. But right now, since Carvana is tight on cash, it's more prudent for management to sell those loans, get the cash right now, right? So I totally agree with management here in selling these loans and boosting its balance sheet with more cash. Another thing I like that they did is they sold off their inventory and they didn't replace all of it, right? So they had a lot of cars in their inventory last year, and they've just been selling them without getting new cars, right? And that's helping fill the balance sheet because that's money that they had paid for those cars years ago or last year and 2 years ago, and now they're getting that cash back. So inventory was down 55% year over year. That was good news. So now they've got 541 million in cash, and they generated 443 million in cash flow from operations, partly because they reduced inventory, and that's a positive effect on cash flow from operations. So all in all, an overall excellent quarter for Carvana. To update my recommendation for Carvana stock, I still am not rating the stock as a buy. I'm still not saying the stock is a buy because it's still so risky in my view. The company has still not proven that it can be sustainable in the long run. I want to see the company stabilize, find an equilibrium here, continue to reduce costs, continue to improve the balance sheet, and get itself on firm footing. And then I can think about recommending the stock as a buy. For now, these are volatile price movements as the company makes these big improvements, but they can also go in the other direction if the company has a bad quarter in Q3. So for those reasons, I'm not recommending Carvana stock as a buy. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.